Welcome to TheoTrade. This is Don Kaufman. November 30th, 2022. Just about 18 minutes to go to the cash close here on this Wednesday afternoon with an absolutely explosive rally. Once again, brought to you by none other than, well, our Fed chairperson, you guessed it, Jerome Powell, as Powell just pounds the bears into hibernation. Of course, on this Wednesday evening's video, we're going to look at some of the price action to the upside. But before I go any further into this, into what, Jerome Powell even said, it is an imperative that we understand volatility, it's far from over. I'm going to say it again. The volatility in this marketplace is far from over. And I'm not talking about a couple of days into the future. I'm talking about right here, this week, right now. Let's get down to it. So S&Ps at this point are up a staggering 2.6%. That's absolutely nothing in comparison to what you're seeing inside of the Nasdaq. Almost a 4% upside, just a momentous move. One of the most important things that you can actually discern off the move to the upside is, well, inside of the SPX. Here we go. We're going to the mother of all products. For just a moment, I'm going to zoom out. And the reason I'm going to zoom out, I want to take you into, if you will, some of the expected move. I think this is actually a great place to kind of kick off this evening's session. When I'm talking about expected move, what I want you to kind of recognize is, all right, this entire trading week, we were looking for a $76 move higher or lower. Obviously, okay, we have moved a bit more than $76. Neither here nor there. The one point to be made, we just ripped off the lower edge of the expected move. We held the lower edge of the expected move. Jerome Powell hits the main stage, pounds the bears into hibernation. We explode to the upside. Now, the Powell comments, let's just get this out of the way. The Powell comments, okay, in my estimation, were not that dovish. Okay, meaning that they weren't that soft, they weren't that gentle, they weren't like, well, we're going to halt interest rates. I'm actually going to give you, there were only two very dovish comments. The first being the time for moderating the pace of rate increases may come as soon as the December meeting. So for the most part, what they're saying is, hey, probably no huge 75 basis point hike, maybe only 50 basis points. The last time I looked on that particular front, take a look at the Fed Watch tool. What does the Fed Watch tool say? By the way, the markets, they're still open. So when you have the markets open, you can hit this little refresh over here. Look, they're basically pricing in now about a 77% chance of a 50 basis point hike. I don't know, from where I stand, I still think that a 50 basis point hike is a lot, especially following four 75 basis point hikes. So the marketplace, though, it loved it. The other comment that was dovish out of none other than Jerome Powell, it said substantial progress towards sufficiently restrictive policy, but they have more ground to cover. For the most part, what that basically breaks down to, yeah, they've made some headway. Of course, if you jammed rates, right up the market, it's, you've definitely covered some ground in there, but apparently they have more ground to cover. Again, I did not take those comments as being like wildly dovish. They basically stated they still had a huge amount of ground to cover to make sure that inflation was sufficiently knocked out. Anyway, it doesn't necessarily matter what he says. The marketplace was looking for it. We went into a gamma squeeze. We exploded to the upside. Now, without further ado, I want to bring you, just right up front, forget about price action right now. Like, what do you need to see in here? Well, we were trading down here at what? 39.50. Now we're trading up here at 40.70. So it's an explosive move. Nevertheless, at the same time, we're saying it's an explosive move. And I want to show you the intraday on this particular front. On the intraday, we were literally on it, on the lower edge of the expected move when Jerome Powell spoke. Okay, we break back out to the upside right here. That's actually the starting place for the week. So we were massively unchanged in the week, and now we've lifted even further. Again, you can't just, hey, it's only a 105-point rally. No, it's massive. I mean, for the most part, the kind of rally that you're seeing today, and I'll take you into the to the daily chart over here. It's not nearly as large, of course, as the CPI print, but we've had, this is the 13th day of absolutely nothing, okay, followed by an explosive move. Again, we're just like in a hairpin trigger on this marketplace, and I'm going to tell you, as I said twice earlier, there is more volatility to come. Why do I keep saying that? Well, for that, let's actually consult none other than the mother of all products. Yes, you know it, you love it. We're back to it. Yeah, we're talking about the SPX again, but you know what? At this particular time, we're not going to look at the chart. Start reading into the volatility. And the reason we're going to read into the volatility, you're going to learn something, well, quite entertaining at this particular point. All right, the entire week's price action was expected to be 76 bucks. Okay. In fact, to actually recap that with you, so I'm going to go over here on Thinkorswim to the Analyze tab, and I'm going to go Think Back. What is Think Back? It's an end of day, okay, just an end of day data tool. So here we are today, of course, the 30th. Let's actually back it up to the 25th. So that was that half a trading session, yada, yada, yada. You get the picture. Okay. What I wanted to show you was, hey, last Friday, okay, we had 5 trading days ahead of us, right? So we had Monday, Tuesday, Wednesday, Thursday, and Friday. And here we are. There's the expected move, basically 76 bucks. So now fast forward, okay, that was last Friday. Fast forward to, well, right here, right now, today. We've already come through Monday, Tuesday, and now we're through Wednesday, and we still have a $62 expected move. You're like, wait, what? Yeah, we have a $62 expected move. After we've seen vicious, downright vicious price action. For the most part, you kicked off the week, you sold off by 76 handles, okay? We were down a total of about 80, 85 points in the week, and all of a sudden, boom, exploded back up by what? Oh, about $107 in a week, and yet we're still pricing in another $60+ of movement into the marketplace. Just so you guys know, this number was actually $75 earlier today. So some of the volatility came out, but I'm telling you, they're actually promoting the idea that there is this immense amount of risk packed into, of course, the employment situation, which is coming out on Friday morning. So once again, you're going to look at the volatility, like the volatility got crushed, man. Did it? Okay. Yeah, look, there's the VX. The VX is actually at some new lows over here. You start looking at the VIX. Okay, the VIX is right down, butting up against its lows. However, at the exact same time, hey, listen, the expected move for this week, it's still rocking. Even the VVIX came down a little bit today, but not nearly. I mean, it's well off of its lows at this point. Again, take some of the price action, if you will, that you're seeing today with a grain of salt. There's going to be a lot more volatility in store for here. I would not be at all surprised to see us actually have a little bit of pullback, a little bit of contraction, possibly back to where the week started in here. This is not me bearing up. This is me just simply mentioning, okay, it would make a lot of sense to actually pull back, all right, back inside of this rather tight channel that we've been in prior to that employment situation effectively coming out, right? Because again, it's all about volatility at this point. I've been warning people time and again that the marketplace, in fact, if you guys will remember back to the weekend video, that the marketplace itself, it is too, at this point, data dependent, right, to try to take a big time directional bias. And we haven't. All we've been basically doing is selling out of the money premium, financing, okay, other trades via selling out of the money premium, which is what we call the catapult strategy, okay? And that's what's effectively worked right now, is selling some out of the money premium, Ultima, inflection point spreads, you catapult, and that's it, okay? Because at a point in time like this, hey, listen, you just pop to the upside. Even if we do contract a little bit, let's also be extraordinarily mindful that we have a major level, okay, just north of where we presently are. That level is 42.11 to the downside, okay? We have roughly 39.31. I'm going to tell you, there's nothing in between. You got to understand that something like the employment situation is just the type of catalyst, once again, to drive us higher or lower. We still have an incredible amount of indecision left in this week, but I will reiterate once again, the volatility has not passed us by. It is still packed into the remainder of this week. So with that, keep your hands and feet inside of the vehicle at all times. right now, again, facing almost a 3% move to the upside in the S&Ps. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.